Well, those are some of the big winners and losers of this year, but which ones could be the big gainers in 2015? All week long, we'll be talking with our market monitors about their stock picks. And we begin tonight with Peter Sorrentino. He's Senior Portfolio Manager at Huntington Asset Advisors. Happy holidays, Peter. Nice to have you with us.
Thank you, Susie. Happy holidays to you.
Well, you heard our story at the top of the program talking about energy prices and all the volatility in that space. And your top stock pick right here is Valero, which is an oil refiner. And it's trading right now at 50. You think it can go up by 20%. Tell us why.
Well, one of the things that we're seeing is because of the supply of cheap crude that's available, especially the low-grade crudes coming out of both Mexico and out of Canada, that Valero is uniquely positioned. Very few refineries in the world can handle that type of crude, so it's sort of a closed market. So the collapse in price really allows someone like Valero to use very cheap feedstock, and because they're pretty well integrated in both ethanol and crude refining, they can ship blended product all around the world, and that creates an opportunity for them to undercut competition and take market share. So even with prices crashing and prices at the pump falling every day, it creates an opportunity where sort of survival of the fittest becomes the rule of the day, and for those properly positioned, it creates a great opportunity.
A lot of analysts love technology still, Peter, and often they're talking about the Apples and the Twitters of the world, Facebook. But you're going with an old school company, the software giant Oracle. Why?
Well, one of the things that we saw this year, and it's been a recurring theme, and it's got to be getting attention and got to be getting its share of capital spending going forward, have been the security breaches. And they continue to happen. They're becoming financially very risky. If you're in a regulated industry such as financial service or utilities, this is a real problem, and you're really going to have to start to address it, and there's going to be an outcry to see to it that it's dealt with. And so for the big players who can cover a lot of the needs of a corporation, it's a unique business opportunity, and Oracle, I think, is well positioned. They have a habit of moving the company where it needs to be, as we saw with their acquisitions over the last really 15 years. They move in a very methodical fashion, so it's one of those names that it just keeps going up in your portfolio. You buy it well, and it just continues to climb higher. So it's a name that we feel pretty confident that we can buy, and it'll continue to work for us for the foreseeable future.
Peter, we know that healthcare stocks have been real strong winners in this past year. You've chosen for the new year a REIT, managed care company, Senior Housing Properties Trust. Tell us about why this is attractive to you.
Well, one of the things that the healthcare law changes did was it sort of cleared the mist away. And for those who are approaching retirement, as we have such a wave with the baby boomers, it created an opportunity for those in the healthcare, especially in the senior care area, to begin to position themselves where the demographic trends are most favorable. And senior properties has been one where they've really done a good job of acquiring properties. They manage them well. They manage properties for others. And the demographic story is an old one, but it's still there. And we haven't really seen much of a change in the labor participation rate. So it, in fact, looks as though a lot of the people who've left the workforce have no intention of coming back. As such, we think that creates a surge for them in terms of a future clientele.
All right. Well, a lot of interesting things to think about. Thank you so much, Peter. Peter Sorrentino at Huntington Asset Advisors.